Welcome to Conversations with My Real Friends. I'm Jennifer Felten. I'm joined by my friend Brandon Feder. Hi, Brandon.
Hey.
So let's talk about life insurance. So what's the difference between term life insurance and whole life and universal life? I hear all these words.
It's a lot of terms.
What are the differences?
Yeah, there's two umbrellas. There's term and there's permanent insurance.
Okay.
Under permanent, there's whole, there's variable, there's
Right.
universal, all sorts of variations. So
Yep.
term is like renting.
Yes.
You pay a bill in exchange for coverage. It's more cost effective.
Right.
And it does have an expiration date at some point. It could be 10 years, 20 years, 30 years, maybe even longer.
Right.
But it's pretty just plain and simple life insurance, where permanent insurance, it's more of an asset to where you have death benefit that never expires.
Right.
You don't have to worry about outliving it. And then as you fund a policy like that, there's a component inside that accumulates cash value.
Right.
And the cash can be accumulated in different ways depending on the type of permanent insurance.
So it's an investment versus, I mean, it has multi-components versus a term policy, which is just that. It's just insurance.
Correct. Yeah. So there's equity that's being built, similar to property,
Yep.
and if that equity needs to be borrowed against or used, if we structure it properly, you can access it tax-free.
Right. So for things like paying for college,
Totally.
right?
Yeah.
Different things, or buying a house, right?
Exactly.
If we're saving and putting that money aside, it's another bucket of a resource.
Exactly.
One of the things I think about is, as we start to retire and are looking at our financial planning, maybe the market, we don't want to sell a stock right now or our investment. We can take money out of our life insurance if we have it and pick and choose when we're taking from which bucket to make better decisions and mitigate losses.
Yeah, it's another diversification tool when it comes to leveraging wealth distribution.
Right.
Of understanding the timing of things.
So if we're going to have life insurance, how much should we get?
The calculation I like to run is really a combination of debt, which is usually a mortgage, maybe a student loan, credit cards, things like that. Secondly, if there's kids in the situation, do we want to leave something behind for them, whether it's for school or just a head start in life?
Right.
And then thirdly is the monthly cost of living for the household. Would we like the life insurance to pay for that for a period of time? And usually parents want that to happen until the kids are out of the house.
Right. So you want your spouse, theoretically, right? You want to have enough for them to be able to live the same lifestyle if something happens to you.
Exactly. A shortcut, you take your income, you multiply it by 10. I'm just weary about that because there's so much variability.
Right.
There's so much, everyone's circumstances are very unique.
Well, and also with that, what you're making today may not be what you're making 10 years from now, right?
Exactly.
So look, we have to guess at some point, but the more factors you can solidify, the better, right?
Exactly. That's correct.
Good. So if you want to talk to Brandon about life insurance or how to plan for saving, how can they reach you, Brandon?
Yeah, you can reach me at my website, brandonfeder.nm.com.
Great. Thank you, Brandon, for joining me.
Thank you.
And thank you for joining us for this episode of Conversations with My Real Friends. We'll see you soon.